Hey everyone, thanks for tuning in. I'm Crypto Vatsik. Before we get started, I would really appreciate it if you did hit that like button. And if you do find this content helpful, please don't forget to subscribe to the channel so you don't miss out on new material. As always, this is not financial advice. These are my opinions only. Okay, let's go. Okay, so today's going to be a quick review of two different altcoins. We're going to do Polkadot and then we're going to do Ethereum. I'm just going to go through my TA pretty quickly and give you my current thoughts. Okay, so just quickly, I just want to give some context to start off. So if you're learning to trade right now, there's a big difference trading this market versus a bull market because currently we're in a bear market. So you should definitely be aware of that. There's also definitely theories I'm about to cover that apply differently depending on the market. So there's a difference between trading, accumulating, long-term bags, trading lower time frames. So you want to identify your strategy before dumping, your hard-earned money into something. So what I'm about to cover is how to trade on a lower time frame. I'll also touch on some accumulation stuff as well, though, so don't worry. Okay, so right off the bat, we got Polkadot on the 12 hour here. Okay, so I always start with a range. So you know how I love ranges. Okay, so everything I would say so much revolves around ranges, honestly, in this market. So I always like to take the range. I'm going to start from the swing low here. Okay, this was the bottom of this move, at least at the time, and then we had a swing high. Okay, so we had our immediate high here. So you take the range from the bottom to the top, and then it gives you your equilibrium and your bottom band and your top band. And I go super into depth into ranges in my other video. I'll post it on this video now, so you'll see it at the top right of the screen if you want to go learn further on how to trade ranges. They're not as simple as you may think. And what I'm going to do now again is, apologies if it looks a little messy, but I'm going to do another range right here from this swing low to this swing high. Okay, so we'll actually go to the wick here. Okay, so basically this next swing low that we had, and then the swing high top of the wick, we had another range. Okay, so like I said, everything's about ranges and it's about breaking down above or below these ranges. And so I'm going to get to that further in a second, but it just gives us a good starting point. Okay. Next, of course, I've covered this in many other videos as well. We've got obviously our area of demand down here. Okay, so this is our area of demand where we've had our bullish order block, our local bottom is right here. Okay, this is we had our local bottom, and this is our local bottom at this point. Okay, so this was made on July 12th. Okay, so we had a break in market structure, and that previously led us to our previous bear market rally up here. And so some people like to use liquidity a lot, and basically it's just difference between supply and demand. And so if you came back up here, you could have said, oh, we came back up into this range and we just tested near the EQ, or you could have said, hey, during this previous bearish consolidation or this previous level that we had here, we basically came up and swept this supply right here. Okay, so somewhere in here probably in a higher time frame, there's also a bearish order block right here somewhere in here sort of thing. And then we came up here, we swept this liquidity, we took it, people unloaded their positions, they shorted it, and then we came back down. And the vice versa to that is we came in here, and then when we came back down, what did we see? We came back down, vice versa is demand, right? So this is our area of previous demand. We came back down with these wicks, we swept that area right here, okay? Right across, we've swept it a few times now, okay? So we've definitely tested that demand, which is a good sign because it reacted nicely. And one of the telling signs that obviously we're in a bear market, other than the fact that we're just clearly at the bottom of a previous cycle, is the fact that we have these staircase up and elevator down scenarios, right? So we got basically over here, kind of staircase up, quickly down, staircase up, took like, what's this date range right here? Okay, so it took us basically 41 bars to go from here to our high, and then basically elevator down, right? So you can see the length to go from the bottom to the top here was a lot longer than basically when we broke market structure and came back down to the bottom, right? So you're seeing staircase up, elevator down, and the resistance is strong. People are selling. It's definitely still a bear market. And overall, if you just zoom out, we're just still making lower highs. Okay, so lower lows, lower high, lower lows, lower high. Broke the high temporarily, but still in comparison to this macro swing high here at the range, it's still just a lower high, right? You could zoom out on higher time frame. We're still just making lower highs, and then here's our recent lower high as well. Okay, so it's important to understand the type of market conditions that we're trading in. And people always say, trend is your friend, right? So if you were just continuously looking for shorts, you'd probably be outperforming someone who is looking for longs in this market, right? So you just wait for your swing high, you short, comes down. You wait for your swing high, comes, so maybe you sweep previous high, you sweep some liquidity, you short, comes back down. So if you're just continuously looking for shorts in here, I would say that you're probably going to outperform someone that's looking for longs. And trend has been your friend, but we're starting to see this round off bottom at the local low here. Okay, so this is potentially starting to become more of an even scenario where it's just chop, and then it's just chopping shorters and longers at the same time. Okay, so what do we see? So we saw this, obviously, this first large range that we had here, right? So then we broke down below it, and then what did we do? We created a new range, and then as soon as you break out at the top of that range, I just go back to the previous range, right? So I know it's a little difficult to see here, but basically when we broke out of this smaller range down here, this tighter range down here, we broke out and we just came back up and, like I said, almost touched the EQ of the previous range. Okay, and so now for me, this I'm just gonna get rid of this smaller range for now, so it's easier to see. But now for me, this range here that we're seeing, the key level is this bottom band. Okay, and so the reason why I say that is because if you're just used to bull markets, you'd be saying, okay, inverse the chart here, right? This is your key level to hold. If you want it to keep going up, which would really be down, this is your key level, right? So you came back down, call it a deviation, whatever, retested the EQ, but then you reclaimed this range level here. And if you want to see a continuation, you want to see this level hold, okay? And so what you would want to see if you're going long on this and or inverse the chart is you want to see a break that range, right? So just again, I'll invert it, right? You want to see a break, a new low, and you want to see it to start act as resistance and then start to test the EQ and possibly further, right? And so that's what I'd be looking for is basically hold this area of demand, okay? Make a new high, come back into the range. I don't care what it does. As long as we hold this bottom band, then we've created that base. And the reason why I wasn't getting too excited when people were getting super bullish in this area right here when we were starting to see some, some strength come back is we had these long legs up, but the next leg really wasn't pushing that much further up, right? So we had this wick here, we had our next leg up, it just barely made a new high, same thing, came back down, new high, and then we just created this rising wedge right here. And so rising wedges typically, at least for sure in a bear market, typically break downwards, okay? And so what did we see? Let's zoom in here quickly. So we started tightening up, okay, between this level, the top band and bottom band here. And then what did we see? Well, we saw basically higher low, higher low, higher low, higher low, strong trend. You could have created this trend line on a lower time frame, but then right here we saw a break of this trend, okay? We made a lower low, and then what I preach this, right? What am I looking for? I'm looking for that break in structure, which we got, okay, right here. We broke the level, and then I want to see that retest. So we made a lower low here, broke bullish market structure, and then we came back up, and you might be difficult to see, but we actually had a beautiful retest with this wick and with this wick. So right here would be a trigger to short. Well, the trigger was breaking market structure, but your target to short would be a retest of this level here that was broken, okay? And so then you had a second chance over here in this wick to actually short this. And so that was your trigger to come down. That was your trigger or your sign that this was likely coming down. And here you go. Here's just typical theory on rising wedges, right? So you could screenshot this, save it, whatever. And basically, this is just basically offline, okay? So online, sorry. So this is just your principles of a rising wedge, right? And you can see even in a bull market, rising wedge typically breaks down, and in a bear market typically breaks down. Sometimes in crypto, I've seen rising wedges in a very, very strong bull market break to the upside, but it's typically in a very strong bull market, or it's typically short-lived, okay? So you'd have a super big breakout, and yeah, there's maybe a big gain, but then it comes down shortly after. So you call it like one of those fake outs and then breakout kind of thing, right? So just got to be super careful trading them, but sticking with this for now, this is just a classic rising wedge. Okay, and then clearly now what we're seeing here, zoomed in a little bit on current price action, is obviously we've got this bearish order block here, right here, okay, with our bullish order block of demand down below in green, with this huge red candle that we recently had, okay? So this is basically within this area, I would say, let's just draw it out. So basically between this level where we broke down and this level of this huge red candle is called just a fair value gap, okay? It's just an inefficient gap, inefficiency in the price. And so I would not be surprised if we get a really decent bounce right now. And I mean, off the bottom, it's a decent bounce. You come up into this, you could come up into this previous order block up here, but I wouldn't be surprised if we started to see something like this and fill up some of this inefficiency, come up, sweep this area of liquidity, and then probably just come back down and just chop some more, okay? So it's just really a tough market right now to trade, and long positions, in my opinion, have to be short-lived. Otherwise, look to short. Learn to short first, know what you're doing. But in essence, it just goes back to those using those range levels, okay, breaks in market structure, breaks in those range levels, and then go into the next range. And what I mean by that is when I showed you this range, right, the first one that we drew on there, but then the second one, I don't know if you remember, which we had right down here from the swing low to the swing high, okay? So then basically now I'm just zooming in and I'm just waiting for a break in one of those significant levels or a reclaim of one of the levels, okay? But for now, on the low time frame, for me, the key level that I really want to see held is this order block down here. I really want to see that held because this is, for me, just a significant level right now in the short term if you're looking to trade this before we get down and play into this area. Okay, so that's what I wanted to see, what I want to see held right now. You got to be careful down in this area when you start chopping yourself up, and when the market's undecided or just basically there's no clear direction, right? And now we're starting to flatline. Okay, the downtrend has kind of cooled off. There's not really an uptrend. At least in a macro scale, it's definitely not an uptrend. And in low time frame, you could get these short-lived uptrends. However, just don't assume it's coming down or going up, right? We have to let the chart tell us what it wants to do. And anybody who says they know the direction is lying. Nobody knows at this point. So you have to objectively reason yourself, make your analysis, okay? And if you're going to take a position, manage your risk. So for now, on low time frame, I'm not really interested in trading this. I'm still in kind of accumulation phase, and I'm looking to accumulate projects down here because really, if you just zoom out, and I don't know why some people have a hard time doing this. You just zoom out, like where do you want to buy? Where do you want to accumulate? Okay, if we're we could still drop quite a bit, right? But you just look at previous accumulation zones, okay, and that's what you want to see for your accumulation. Okay, so you just want to see this kind of steady. The downtrend is super cooled off. You made your low, and then you're steadily kind of either bouncing on a certain level, you're not breaking it, or you're making super slow higher highs, higher lows, or just like at least higher lows. You're not breaking that level, and then within this, there's just ranges, guys, here. Okay, so we had our first range here: up, down, deviation below, up, down, deviation above, up, down, tightening, up near the top, breakout, retest, new range, up, down, okay, breakout. And then I'm sure you can continue on all the way up, but then obviously we got a super big bull market, right? And so then it's a different environment. So you got to be aware of that. And so what I'm looking for is just these ranges in this accumulation pattern, buying down here, not up here, okay, not in the middle, just looking for that phase where we're going to start to, it could take some time, okay? So keep that in mind, but start to really bottom out and just hold a level. Definitely hold that level and start to see that accumulation that I'm talking about. Okay, now we got Ethereum here, and I've shared this on my Twitter and in a previous video, so I won't go too much into it, as you've probably already seen this if you're watching my videos. Basically, my idea here was that we had a break in market structure up here, okay, so we basically were up in this uptrend, and we had a breakdown in market structure, broke below the bottom band of this previous range, okay, and then obviously now it's bearish, and so I was saying that now I'd be looking to go short in a retest, a bearish retest of this level right here where we broke that market structure and where we came back to that bottom of the band, and then my target was down here in green, somewhere in green, okay? And so just highlighted in yellow, this is where we bottomed out, and obviously the target came over here, tested this demand where this huge wick was, so this demand is very, very strong, didn't even come into the zone, actually, just bounced on the top. So that was my target. It beautifully hit. I was really proud of myself there, actually, but it's just simple, you guys. I mean, honestly, like it's just like a simple methodology, and honestly, once you kind of learn it, it just kind of comes a little bit more naturally. So anyways, yeah, so where are we now? Okay, so basically similar. We've seen a lot of strength in Ethereum. We've tested this demand now, so it's confirmed. Okay, and so then what I'm seeing now is just a new range right here. Okay, this range right here is our new range. We're coming from that low where the target hit, okay, to the high, and the reason why is because this is our swing high, and then this is our swing low. At the time, maybe this would have been your swing low, right? So you could take that there, and obviously it's respecting the bottom band, but to be truthful to myself, I'm going to take it down to the bottom here. So that's a macro sense, that swing high, swing low. And then where did we come up? We came up to the range EQ, which is the previous range bottom band, tested as resistance, swept this high, okay, and then we came back down, and now we're just ranging in the bottom 50th percentile of this range. The other thing I'm noticing for you diagonal people out there is that we've made this low, and now we've hit this 3 times, okay? So 1, you could argue maybe 2, okay? You could take it out, maybe 2. That's a bit of a stretch. Then 1, 2, 1, 2, 3, 4, okay? So this could be a strong sign. If we hold this level and we start to get up and hold it, and then we come back up above this area, okay, above this previous bearish consolidation, would be a really, really good sign. Okay, thanks for joining, everyone. See you on the next one. Bye.